We're at SuperReturn Africa. My first question to you is, you've been investing in Africa for well over 15 years. What changes have you noticed, especially from a risk perspective? Do you look at risk the same way now that like you used to 10 years ago?
Right. I think in many ways the risks are the same that they've always been in terms of getting good management teams and making sure you have good exits that are going to give you value. That's one area that's changed. I think we have a lot more exit avenues now than we did before. A lot more interest from strategics, strategics from various parts of the world. Certainly more than there were 15 years ago. And so there's been a kind of broadening both of the sectors that we can invest in. You've got new sectors like education, healthcare, as the consumer economy starts to grow there. Also new countries, 15 years ago, investment into Nigeria wasn't really much of a possibility. So both the sectors and the countries have increased, and that's really made it a bigger space for us to play in over the 15 years.
Okay. Obviously, Africa has received quite a lot of attention, especially in terms of fundraising. There's this debate around supply versus demand. There's an increasing amount of capital that's been raised for the continent by investors like yourselves. But are there enough good deals? And so, excellent deals that will provide excellent returns, the super returns for investors on the continent?
I would say it's not really, for us, a question of deals, it's a question of opportunities. There are certainly a lot of holes in the market there. There's certainly a lot of businesses that need consolidation. There's a lot of business models that need to come in. There's a lot of things that are done informally that are going to come into the formal sector. So in terms of pre-wrapped businesses that are being shopped around, that's not really what our game is, and that's not what the opportunity set is. So from that standpoint, more capital is coming, but relative to the size of the economy and how fast the economy is growing, Africa is still going to be relatively starved for capital. There's not going to be a glut of capital in 2014 or 2015.
Okay. Following up on your debate this morning on performance and exits in Africa, I mean, you mentioned that there's been over 200 exits on the continent, I think, in the past 6 years.
Right.
And you, within ECP, you've had, since inception, at least over 33 exits.
Right.
So, I mean, it sounds great. But there's a number in terms of performance returns of 12% that people keep harping on. How do you reconcile performance and number of exits on the African continent? Is it one and the same, or is it quite different?
Well, that's a good point. I guess there are a couple things. One is, we were talking about a period where there has been a significant, financial crisis in the middle of it. I think that's, obviously knocked the returns down across all markets there. But also the 12% is a blended number of really the entire industry. So that has maybe infrastructure funds in there. It has funds that might have had a social impact or something, or all together with funds that are trying to make top profits. So there is quite a range, and you do have an industry where the top funds will be in the high 20s, maybe even the low 30s type of return. So there's certainly opportunity and a track record of producing excellent returns, and I think the prospects are looking very good for that going forward.
Well, thank you very much. It seems like it's an exciting future for Africa private equity, and thanks for taking the time.
Oh, thank you.